Hi there, in this video I cover my returns up until the 31st of March, of course Q1 2021. I go back a month, 3 months, 12 months, 3 years, and back to the beginning of time, which is November 2009. And I sort of do this to sort of measure my performance, and I'm going to try and do this every quarter, because I think it's just good to measure your performance. It did help I had a good quarter, let's be honest. But if I have a bum quarter or bum year, I'm going to post it. I'm going to try my best to post it. In fact, some of the stocks I cover, which I dumped way too early, I missed out on big time. Okay, let's get into it. Q1 2021 done. And out the way, hopefully. Hopefully we're going to a more open economy very soon, you know. But Q1 has been quite good for me. My returns up until the 31st of March are as follows. In the last month, I did 34%. In the last 3 months, I did 82.8%. Last 12 months, 198.9%. And over the last 3 years, I've done 588.5%. And since inception, since I started, oddly, the app, Barclays app I use, did have this data going back to that date, and they stopped it recently. But luckily, I did have the recorded data. So normally, most of these are screen captures of a Barclays account. But obviously, I've not got a spreadsheet going back that far anyway. So this is just the total. So that's pretty much 70 times my original portfolio value. All right, which, I've had a bit of luck there. I've jumped in some good stocks, but I've also missed out on some massive rises, which could have transformed my portfolio. So it could have gone better, but I'm very happy the way it's gone so far. And I think a lot of it is just concentrating your portfolio, not diversifying. I've done a video on this in my lessons on the website there, sharepickers.com. Diversification protects you from risk, but also protects you from reward. And you've got to sort of deep dive, do research, and have conviction on the stock to really get decent return, I think. It depends, what your appetite for risk is. That's what I think. By the way, this is the companies I hold. Skaben at 276, Dufin at 120, Player 106, Trufin 22.2. Track-wise, I'm down a smidge. In fact, it was up, I think, on the 1st of April, so I'm up a little bit really. Ilika up 88. It's had a bit of a sell-off, these two. On the market, down now, and branches down. That's the market there, nice mixture there. So these are the companies I've covered on the blog, on the video. I held shares in all these companies, and for some reason or other, I dumped them at one point, which was wrong in the case of Argo Blockchain. Did 3,224%, and Powerhouse Energy 1,300. So if you put £1,000 in these, 33 grand there, 14 grand there. Open Orphan as well, a bit silly doing that. And so if you look at the stats here, 2 stocks have 10 bagged, 5 have 5 bagged, 1 stock has 4 bagged, 4 stocks has bagged, 7 stocks have made a double-digit percentage profit, 7 made a loss. Okay. And like I said, these are losses here. The ones in yellow are the ones I hold. If you'd invested all in £1,000 in all these stocks, you'd be sitting on 96 grand now. That's a lot of that is obviously thankful for Argo Blockchain. If you'd held all the way, if you'd invested £1,000 each, 26 grand, your profit would be 70,000. That's £96,000 total. That's a percentage return of 273% over the last 2 years. So that's decent, But what's really galling is I dumped these out of impatience. And Way Education as well just got an offer, which is annoying. I did okay on Way Education, but nowhere near that. So what do I learn from this? Why do I do this? I think it is just to say, I should have had patience there. I did lots of research on these companies, I did plenty of videos on Open Orphan, Powerhouse Energy, Argo Blockchain. I did it on Bitcoin. I did it on this as well. I held stock in them, and I just got bored. And I knew they were good investment. I mean, Bitcoin has gone a bit mad, but there was always that, talk about Bitcoin doing $100,000, So I always had that in mind. It could have happened. And like I said, the investment case for all these is the same. Escape Hunt, genuinely think I'm not going to let go of it until it gets to £1.50. That's not overvalued. It's 3 million of value per site. They're going to have 50 sites. They're the only company I know with a roadmap to now a 5-bagger pretty much, nailed on. There's no other roadmap as see-through as that. That's why I did that video, roadmap to £1.50, because you can plot it out. Every time they add a new physical site, it's worth about 3 million. EBITDA times 20, it's worth. There'll be a market leader, a brand leader. So I'm going to learn my lesson. I'm going to hold on to that. And of course, without physical sites as well, there's digital and play-at-home games. There's outside games as well. So I'm going to learn my lesson, and also with Polarian and Gfinity, and in fact, I need to add Truefin on there as well. But that's why I suppose, if anything, if I can take anything from that, it's like you learn. When you record the companies you've held and let go of, you learn, and that's why I love investing. You come into this game to make money. If you get it wrong, it hits you right in the area that hurts you the most. The wallet takes money from you. So if you don't learn quickly, you've got to get out of the game. Full stop. And that's not the point, is it? So that's why I like it. Thank you very much for watching, and I'll try and post one of these every quarter. And like I said, I think it's good to measure performance, see what's going right, see what's going wrong. Because if you don't measure it, you can't improve it. I think that's the saying, isn't it? I have no idea. But I'll also be posting lots more videos on the Share Pickers Investment Club. And if you want to go there, sharepickers.com. Of course, it's a members area, but there are some parts of the site that's open to public. Thanks very much.